Welcome to Markets Now. Michelle Rook with Mike Zuzulo, Global Commodity Analytics. A mostly lower day in grains, livestock mostly higher. So let's talk about the corn market, kind of a breakdown there technically today, Mike, but also we had some of the news from the USDA Ag Outlook Forum, which kind of pressed the market too, right?
Yeah, and in fact, the acreage base number wasn't that bad. It was 91 million. That's a million less than what USDA gave us about a week ago in their late 2022 update, Michelle. But I think that carryover number jumping back up towards a 2 billion bushel number at just under 1.9 billion probably created a little bit more nervousness in the longs mindset. And also, we still can't get our trade underneath us. And I think that GMO Mexico trade issue coming up again during the actual forum probably made it a little bit bigger issue to the longs in this market. And we took that 40-day moving average out in March. That seemed to hurt us. We go into Friday's trade with now March options off the board. We go into Friday's trade with only about a penny inversion between March and May corn. And so that's going to be real interesting. If we go back to a carrying charge market in that front end minus the May, that's going to be an indicator or a signal that the trade's starting to believe we're going to rebuild supplies like USDA is suggesting.
You bet. And so did we do some technical damage? I mean, will we see enough technical damage there to get follow through tomorrow, or what are you watching?
Yeah, I'm very concerned about that because we did hit a 6-week low in the lead month. We are looking pretty rough when it comes to the weekly chart. The monthly chart is probably within about a nickel of taking out some key support levels. And so we really need kind of an all hands on deck trade on Friday where the wheat, the beans, and the corn kind of push back against some of these ag forum and negative sentiment numbers that we've been looking at.
Yeah, we're looking at just a slight increase in ending stocks number out of the USDA Ag Outlook Forum for soybeans, but really that market looks like, when we couldn't take out the highs here from last week, that we just went into consolidation mode.
Yeah, that's an excellent point. And we had a stronger crude oil market on Thursday. We had a stronger Brazilian currency on Thursday, and we had a stronger EU, a Paris wheat and corn market that closed higher for a change. I was hoping that we would be able to see a little bit more short covering, so I'm kind of pushing that hope back into the end of the week here.
So what's it going to take to get us back above the resistance, though, Mike?
I think the key would be the wheat market because USDA also came in with a very low ending stocks number today on their Ag Forum update. And we noticed the soft red wheat got bought against the corn on Thursday. That's, I think, some spread unwinding and very necessary. We're back to 75 cents on that. USDA's carryover number of 608 million bushels, even on a big acreage base of 49.5 million acres, that kind of, I think, says to the market that if we have weather problems, it's going to do more damage, not less. So I think that wheat really needs to show some leadership. As low as it's gotten, I think it should start to find some bouncing here.
Okay, and that's what you think could break us above the top side in the soybeans?
The soybeans, the
Okay.
corn, and the wheat.
Okay.
We've talked about it a lot lately about those outside markets. I think that wheat is the canary in the coal mine when it comes to that risk off, strong dollar, Fed scare, China US trade tension scare. Anything you lump into a scare in the commodity markets, it seems like the wheat really feels that and is very sensitive to that.
Right, you're exactly right that we keep trading headlines in that wheat market. Where do you think we're ultimately going here, though? What's it going to take to build a base on this market?
Yeah, that's a really interesting question because the last 2 or 3 times it's been about the supply side. It's been about either winter weather someplace or it's been about Ukraine and Russia. So I'm going to go with those two. I'm going to say
Okay.
those two things are coming back into the forefront. We're going to start getting some state data on crop progress reports here next week, and I think we're going to start to see a lot more activity in Ukraine and in the Baltic, unfortunately. And that's one thing USDA said in their Ag Forum: less volatility in 2023. I don't think so at this point, Michelle.
Yeah, I just don't feel like the wheat market is respecting that, though.
No, we're not putting any kind of risk premium in, if you ask me, when it comes to another tight supply situation, especially if the next battle lines are drawn in the sea and not in the land.
So the cattle market, more new highs in live cattle, some record highs in some of the feeder months. Talk about what's pushing that.
Yeah, interesting on the Ag Forum numbers this morning, they cut the production, commercial beef production by 6% for the calendar year. I think that's right on the money, but they also kept the average cattle price at 159 for 2023, and I felt like that was a little bit low. Having said that, I think we've been trading this tighter supply issue tighter marketings issue, and we're really going to have to come to grips with whatever that cattle on feed report says on Friday. So I think we've built in the average number of 104 marketings and around 97 on feed, and 96 and a half, 97 when it comes to placement. So I think we're in a feed the bull territory here, where we've got to have some pretty bullish numbers on Friday to keep this strength going.
Well, we've had boxes moving higher. They've been on fire, so that's been helping out as well. And then this atypical BSE case in Brazil, and the result thereof in terms of exports, that was kind of already known by the market earlier, wasn't it?
Yes, it was, and I think it was important on Thursday. Minerva, the Brazilian company that's responsible for this self-induced export ban that they put in place, which was an agreement going back to 2015. They said, look, we're going to put this ban in place, but we're going to ramp up production to meet China's demand in Argentina and also in Paraguay. And so we're not going to lose any of the Chinese demand. And I think the market's going to have to come to grips with that as well, as these trade tensions get weaker or worsen between our major commodity partners. China in particular is probably going to go towards other countries other than the United States. And the livestock market hasn't really come to grips with that other than the hog market.
So talk about the hog market. It looks like the bottom's in, but it doesn't look like we have appreciated prices very much. I mean, cutouts have been slow to appreciate, as well as the cash trade. So when does that all kick in?
Yeah, I think a range-bound trade is probably what we're looking forward to, because until we get the equities markets on our side and we stop losing on the equities markets and taking back all the gains, the consumption, the retail data, while it says it's good, the forward-looking information says it's really rough out there coming down into Q2, Q3, and I think the hog market's going to be very sensitive to that, because of the fact that USDA said that we're going to have commercial production up 2% this year. That, combined with an oversupply in China the first half of 2023, says we're going to have excess supplies of pork. Now, that's good from a standpoint of the demand side, but we got to chew through that first.
Yeah, numbers have continued to grow here as well over last year. All right, thanks so much. Mike Zuzulo joining us with Global Commodity Analytics. This is Markets Now.